Hi everyone, in this video I'm going to highlight my top stock for 2023, which is Airbnb, the travel facilitator, the asset-light business model. This company was devastated because of the pandemic. People stalled, halted all travel spending crashed in 2020, but that's been rebounding excellently since 2020. You could see Airbnb's revenue here falling in July of 2020 and then steadily rising, reaching 2.88 billion in its most recent quarter. But here's the thing: travel spending has not rebounded like a light switch, right? It's been steadily rising back. It's still below levels from 2019. So even though people have been increasing the amount they travel in 2021, they've been increasing again in 2020, it's still far below the levels from 2019 before the outbreak. So this rebound in travel is going to continue. It's going to be more like a dimmer rather than a light switch, and Airbnb stands to benefit as consumers continue to unleash this pent up demand. The next thing I want to show you here is Airbnb's cash and equivalents first. So it's got nearly $8 billion of cash on hand. And this is becoming increasingly more valuable as the Federal Reserve has increased interest rates above 4%. Airbnb can put this money just into short-term government bonds and earn over 4% on this nearly $8 billion. That could be 320 million in net profits, right? These are profit. That all flows to profitability. There is no cost of goods sold associated with money that they earn from interest income. So that's going to be supplemental to its net income. And if you think about that, to put that 320 million in perspective, consider that it made in its most recent quarter 1.2 billion in net income. So it's a meaningful amount of incremental income for Airbnb. If interest rates stay elevated and continue to remain elevated, that's going to be great news for Airbnb stock investors of 2023, something it only got a small benefit from in 2022. It'll be more meaningful in 2023. And also, look at this: Airbnb has no long-term debt. The company has an excellent balance sheet, which stems from that asset-light business model that I mentioned earlier. Airbnb doesn't need to spend billions of dollars erecting these hotels and resorts every time it wants to grow its revenue. That's what I really love about Airbnb's business. If it wants to grow revenue, if it wants to capitalize from this pent up demand from consumer travel, all it needs to do is incentivize folks to list their properties on Airbnb's platform. That's how Airbnb increases supply. Is it makes it easier, smoother for folks to list their properties on its platform. And folks are inherently motivated to list their properties, their rooms, and their garages or whatever it may be on Airbnb's platform because of the money making potential, right? If you have a spare room in your apartment and you start to notice how much other people are making off of renting their spare room on Airbnb, you're going to say, maybe I should do that. Maybe I should start to monetize this spare room I have in my apartment. Or maybe I turn my garage into a spare room that I could put on Airbnb. Maybe I put my vacation home on Airbnb sometimes. So as you start to hear about and look on Airbnb's site and see other people making a lot of money, you're more interested in listing your property on Airbnb's platform. And that's just extra money for Airbnb because it makes money from bringing hosts and guests together, and it takes a percentage of each transaction. It doesn't need to build, it doesn't own any of that inventory, doesn't spend any money on maintaining, updating, landscaping, and all of that for hotels and resorts. And that's been lucrative for Airbnb. And that's led to this other thing that I really like is steadily rising cash flow from operations, 965 million in cash flow from operations, which is, it's one thing to look at the very nice growth in cash flow from operations. It's risen very nicely over the last several quarters, but it's also incredible to compare it to its revenue, right? 2.88 billion in revenue brought in 965 million in cash flow from operations. That's a really good revenue to cash conversion rate. Nearly one third of its revenue turns into cash flow. I really like that, and I like the sustainability of that model because it can continue go. It's not like a hotel company which can have this happen, this growth happen for a few years and then it hits a ceiling where it needs to build another hotel or another tower or something if it wants to keep growing its revenue, right? It can only it once it fills up its rooms to capacity, that's it for growth, right? It can incrementally raise the room rates, but it can't bring in that much more guests, right? It can't bring in that much more revenue. Airbnb is not constrained by those kinds of limitations. Finally, Airbnb stock is not expensive. It's actually relatively inexpensive looking at its price to free cash flow and price to earnings. A price to earnings of 35 going back, it's the cheapest the stock has been, and considering that its earnings are expected to grow rapidly in 2023, at least by double digits, this price to earnings of 35 is a good price to pay. And not only is earnings expected to grow in 2023, but also probably in 2024 and 2025 and for several years as the company continues to gain market share because it's just more convenient for folks looking to travel, right? Whereas hotels are more of a one size fits all solution for every traveler, Airbnb has more custom sizings, right? If you're looking for just one room, you can get a room for in an apartment on Airbnb. But let's say you're traveling with your whole family, you can rent an entire home on Airbnb. So it's got more customizations, it's got more unique properties, more selection, and that's been popular with consumers who are more so choosing Airbnb when they're picking when they're making reservations to travel. And then also for price to free cash flow of just 17 is the lowest it has been, and it's about the average of S&P 500 companies trading at a price to free cash flow of 17. And like I showed you earlier, its cash flow is rising very nicely. So this price to free cash flow is a bargain price to pay for Airbnb stock, which is finally why Airbnb is my top stock to buy for 2023. All right, that's all I've got for this video. I really hope 2023 is a better year for investors. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.